Hello, my name is Sean Morgan and I'm the Commercial Director of Fingerprint Supervision. More on Fingerprint Supervision in just a moment when we introduce the panel here. Welcome to Shift live streamed thought leadership panel, and we have some great thought leaders with us here today. Shift is an industry-run innovation collective made up of lawyers, consultants, compliance consultants, practitioners, and service providers. And we're addressing some of the biggest issues in and around financial services. And today we're discussing CP 2134, which was brought by the FCA in a consultation around the future of principal firms and the problems with principal firms and what may happen in the future. And we're going to tackle some of those issues within that and how they're affecting the industry and what may come from all of that. So next I'd like to introduce our panel. James Hogbin.
Hi, my name's James Hogbin. I'm the founder of Fingerprint Supervision. We're a service provider that ingests all sorts of unstructured data, voice, email, Bloomberg, and we find intent and meaning in it and give compliance departments the tools to manage the unstructured data, both in terms of discovery, in terms of management, and in terms of reporting.
Thanks, James. Andrew Shrimpton.
Yeah, my name's Andrew Shrimpton. I'm chairman of IQEQ's regulatory hosting business. We have two principal firms within that, G10 Capital and Sapia LLP. We have over 80 ARs and $7 billion in AUM, so we're one of the biggest players in the regulatory hosting business for investment managers. Prior to that, I built up Kinetic Partners compliance consulting business, which became a sort of leading player in getting private equity and hedge funds authorised with the FCA and providing ongoing support. And that was bought by Duff & Phelps, who have now renamed to Kroll.
Thanks very much, Andrew. And Joe Vittoria.
My name is Joe Vittoria. I'm currently the CEO of GRSS, which stands for Global Regulatory Surveillance Services. It's a specialist compliance consulting firm that looks to help regulated firms with their surveillance needs. We're not a systems provider, we're simply a consultant that helps them to utilize their systems more effectively. But prior to that, and up till August 2020, I was the founder and CEO of the Mirabella Group, which was, we keep saying a leading to be nice to other people, but I think a significant player in the regulatory hosting world. When I left, we had about 19 billion under management and several hundred people undertaking regulated activities. ACA Group is the current owner of Mirabella, and we have worked with a number of other firms throughout this time under GRSS, and I think we can talk a little bit about the hosting business across a wide spectrum of other firms.
Thanks. And just before we move on, Joe, you've worked with James in the past, and could you just give us a little bit about that while we're doing the introductions? Sorry, I should have warned you about this.
That's not fair.
We've had the pleasure of working with James for many years. James was helping us with some technology, I think back in 2015, with helping us run the technological platform that we worked on. And we asked him to look into the archiving world, because we felt that we needed to obviously be archiving more effectively all of the communications that we were undertaking. And he looked at the industry, came back with some very pointed remarks about some of the other people the companies in it. And we decided that, or I should say he decided, he could do a much better job at it. And we agreed with him. And we were very, very happy and proud to be the anchor client for Fingerprint. We worked with him, and he sat in our office for several years learning how we worked to better understand the hosting industry, and then went on to obviously work with other hosting firms as well. So I think he's very well placed to discuss how this industry behaves.
Excellent. So we're here to discuss essentially the core of the discussion will be built around CP 2134, and who better to start us off than Andrew, just giving us some little bit of history around the interaction of principal firms and how they've operated under the FCA generally and how that's worked to date, and then we can move on to what's changed as a result of 2134.
Yeah, absolutely. So, as I said in the introduction, I originally was in the compliance consulting business, but it's very aligned with the regulatory hosting business. So, you know, a hedge fund manager or a PE manager who wants to launch a fund, you know, they have the choice to come onto a regulatory hosting and incubate and maybe stay there, or they can go straight for direct authorization. So it's one of the two options you have. In terms of the FCA's, I got involved. I was originally brought into IQEQ to build up the compliance consulting practice, which is growing massively and doing really well. But I've ended up spending a lot of time as a result of a Dear CEO letter that was issued about 3 years ago now. And I think that's where the regulatory hosting business kind of came to prominence, and it was the first. And this was on the back of
Which Dear CEO letter are you referring to? Sorry?
So the FCA refer to, you know, the type of hosting businesses that Joe and I would be involved in are as principal firms with appointed representatives for investment managers. So that's an important point, I think, because there are a number of regulatory hosting businesses out there, and some service different sectors. So we're talking about investment managers mainly. So that's hedge funds, alternative investment managers. It tends to be hedge funds, private equity, real estate. Those kind of hosting businesses also have corporate finance advisors and fund distribution businesses. So there was a specific thematic work done on that, and then that led to a Dear CEO letter.
Okay.
But you're right, before that I think they'd looked at the insurance industry. So that's an important distinction. So the firm I work for, IQEQ, were building up the compliance consulting business in the UK. Then they bought a big regulatory hosting business. So given, and I was at the FCA, and I wrote the paper on hedge fund regulation way back in I think it's 2005 now. That they asked me to go onto the board, you know, and that's when I got involved. So I've been involved for the last 3 years, really trying to respond to that Dear CEO letter, which fired the gun on all this.
Okay, thank you, and we'll come on to that in just a moment. So, James, from your perspective, and Joe, what role were those principal firms serving in the market? Were the FCA themselves using those principal firms as a bit of a crutch to enable people to operate in the market? What did it allow people to do, and what were the drivers behind it?
So I can speak from personal experience. We set up a retail structured products manufacturing distribution company, and our choice at the time was to become regulated or become umbrellaed to undertake the business that we were doing, which was putting retail structured products into professional investors and retail investors through the IFA network. And the maths was such that to become regulated, you have to spend £30,000 or £40,000 on professional advisors, and then you have to hold money back in an account in cash or near cash for the regulator, and then you had an ongoing recruitment requirement for a compliance person and an ongoing engagement with compliance people. And that's a really big number for a small business. Or we could go to a regulatory host for a fee on a monthly basis and get our business up and running really quickly. And we chose Mirabella, actually. So my first interaction with Joe was as an umbrella client of Mirabella's, doing various bits and pieces. And actually, our compliance advisor to get there was Andrew at Kinetic, who suggested it a long time ago. So as a firm, it enables you to jumpstart your business. You don't have to wait the 6, 8, 12 months of the FCA. You don't have to pay loads of money to different advisors to put your permissions in and your application, and then put all the framework around it. To get your business going, to test it, you go to a regulatory host, as long as you pass due diligence, then you're up and running. And so for Mirabella, that was a no-brainer for us.
So that's the view of the individual manager, so to speak. So as somebody running a regulatory host at the time, what was the value proposition to the market and to those clients?
Well, I mean, since we've only got an hour and a half, I'm going to try to keep this brief.
In 60 seconds.
Yeah, this is not what I'm good at. It's a business that I absolutely love, and clearly I can get quite passionate. So pull me back if I get too far into
I will.
it. But the real issue here is that the regulator expects you to do a lot of things and expects you to have certain skills and have the background, in order to get your own license. But the vast majority of people that start up their own businesses don't have yet those skills. Now I'm talking specifically about the wholesale space, what we call wholesale, which is the non-retail. Now, what James was doing, even though the products that he was creating ended up with retail, he wasn't dealing with retail being the man on the street, so to speak, person on the street. He was selling stuff to professionals who would then send it on to other people. So we never dealt with that retail component. And I always believe the retail side of the market has to be protected and protected properly. But the wholesale space tends to be professionals who worked at a firm, a hedge fund, private equity, whatever it is, or a bank, have decided that they've got an idea, they want to run their own business, they have an entrepreneurial urge, and they want to create their own brand, etc., and take that forward. And there's a number of problems, as James has explained. One, the FCA has always been slow in its authorization process, has very rarely ever met its own targets. It's supposed to get people, firms authorized in a certain period of time. In fact, under the AIFMD, there was a very specific target, which it never met, So, and that's not, I don't blame them. I think that the great thing about the FCA is it's working in the United Kingdom, which is a thriving financial community where people want to start businesses. There's reasons why they want to start here. They've got great ideas, a lot of motivation to do that. And it's a regulator that can't keep up with the demand.
Yeah.
Sort of, as that horrible phrase, a good problem to have. It's, but still a problem. So the delays around getting authorized, the speed to market became the big issue. And, between 2003 and 2008, when I was starting out, it was all about just people wanted to get started. The conversation changed and evolved, and certainly firms like Mirabella, and there's a few others, that took it to a different level. We stopped talking about price as being the reason. The fact is there were a lot of people a lot cheaper than us. We started saying to people, look, we're adding value to your firm. Being hosted under us puts you in a different category. Institutional investors, institutional clients, serious firms in the marketplace are going to take you more seriously because they know that we're looking after you and we have a brand to be aware of and one that we care about. So as a result, it became about actually raising the standard that you were operating on.
Great.
So I think that's the real reason for it.
It's a really good explanation. So they were the couple of big firms out there, Lawson Connor, IQEQ as you are now, and Mirabella, preeminent firms running reputable organisations with high levels of governance where it wasn't about price. So how does the industry have something of a poor reputation amongst for some principals and how they operate and run? Where's that come from at the same time, and what kind of practices were involved?
I could never figure when I was running the firm that I knew how much it was going to cost me, and it was a large number. It was 100 and something odd thousand a year. Divided by 12, Mirabella seemed to be good value. But I would expect to pay what my costs would be, minus a little bit of discount because there's some aggregation, divided by 12. And some providers were pitching us at fractions of Mirabella. And for me, as a slightly naive, I'm scared of the regulator still type person, I couldn't square in my mind as a client why on earth these people could do it for 600 quid a month and Mirabella were up there. So I chose to go up there because I wanted the safety. But I absolutely can't understand how the market has got to the position where, knowing how much it costs as a small firm to become regulated, and you can work it out by getting quotes from compliance consultants, lawyers, accountants, that the fees they charge should be anything less than that amount minus 10% divided by 12. But some of them are really low. And I don't understand, either as a consumer or now a provider to that industry, how they actually maintain any form of regulatory oversight. I mean, you two ran firms that didn't play that game. But a lot of the industry has suddenly got into a lowest cost operator basis, and you can't do that because the regulator is relying on the umbrellas to regulate the people that are their clients. And we've almost got into the situation that we had in the financial crash where the rating agencies were being paid by the product providers to put the products out. And we're in that sort of, the clients are wagging the regulatory tail of the umbrellas rather than the other way around.
Yeah, I think the point is that the industry was founded mainly by entrepreneurs who wanted to help other entrepreneurs, and they saw compliance, as a cost of business, and they wanted to provide a service. They wanted to grow very rapidly, but they're often not from a compliance background at all, and they were often, the head of compliance and the CEO. So they were targeting revenue growth, but they were also responsible for creating, the standards and the systems and controls. So, what is happening now, and what I've done at IQEQ, we have a separate CEO and a separate compliance officer. We have a compliance officer for each principal firm. We have a separate MLRO. I'm the chairman as well, so I can challenge the CEO. So the level of governance is being transformed, and I think that's at the heart of the problem. That conflict between a commercial imperative and meeting basic FCA standards, and that kind of monitoring costs money. So if you do monitor to the level that the FCA expect you to, your profit margins are going to be lower, and I think that's the fundamental problem here. And I think Joe, and I don't want to make him blush, I think he was the one, who raised the standards for some of the leading firms, and he was a real driver behind that, and he's known for that.
But
so
you managed to make those systems and controls scale as well. So it's interesting. So just looking back over the recent history then, how have we ended up at this point now of CP 2134?
Okay, so we're going to the G word. We want to talk about Greencell.
Now you've mentioned it.
Yeah, I mean,
let's talk about them.
I mean, look, it's lovely to hear somebody. I mean, firstly, I'd have to say, the firm that Andrew works with now is a very different firm to the one that existed before IQEQ bought the firm. I think we can all recognize that it was a firm that was very large and was doing a lot of business, but was doing it at a lower price. But it wasn't anywhere near the level that James was talking about a minute ago. I mean, we knew providers, Mirabella, I mean, I can't discuss pricing, but let's assume that, maybe somebody was paying £4,000 a year or something around that for an AR at a higher firm. There are firms out there at £750 a month.
There are firms out there, as we found out, at £60 a month. Yes,
and that's the one that just came out, The issue is that when the FCA came in, so 2017, Andrew mentioned, they did an analysis, a thematic review of principles. That actually spread into not just the principal activity and ARs, which is an activity which is limited in the permissions that you can undertake. So only advisor or arranger activities effectively within the AR regime. But they realized very quickly that most of the principal firms were also handling investment management activities, which is a separate set of permissions and doesn't come in under the AR regime at all. Although there were principals that were allowing their ARs to manage money, which is completely against the rules. But for years, and I have to give a shout out to Shona McKenzie, who runs Sturgeon, who was really the first person to really make this business in the hosting industry and really pioneered a lot of it. And she and I would meet often over the years, and we'd know what was going on and report it to the FCA, and absolutely nothing happened. But in 2017, they finally started looking at it. And they actually started, the teeth came out, and they started shutting firms down, and they started asking these questions. And when they met with us, they even told us, we can't understand how anybody can operate and do this properly for less than £2,000 a month. So they had started to come to this realization. They wrote the Dear CEO letter, things sort of calmed down. And then obviously in 2020, the end of 2020, really started 21, we had the Greencell situation. Now it is unfortunate. Clearly, I have a strong bias towards Mirabella. I know I was there when Greencell was onboarded. I wasn't there when things went wrong. So, but I understand what was going on there. And it's pretty clear to me, and I think pretty clear to the marketplace, because we've heard nothing from the FCA to say otherwise, that after quite a long review, they haven't really been able to identify that there was actually any issue with Greencell being an AR. So in other words, and this is my belief, and if they want to prove me wrong, they can, but Greencell would have gone bust, whether it was a directly authorized firm or an appointed representative. But initially, a lot of people, knee-jerk reaction, unfortunately some people in some members of parliament said this as well, they thought that it was all about shadow regulation, and that the AR somehow allowed them to get away with something that they wouldn't have gotten away with directly if they were directly authorized.
But they were only an AR for marketing purposes, right? They
Their
weren't an
activities,
AR for trading purposes.
Yeah, this was from hundreds of people. One of the points, if you read CP 2134, clearly the FCA is looking at firms that are ARs and also undertake a large amount of unregulated activity. Properly, activity that doesn't require regulation. And in the case of Greencell, 90+% was unregulated activity, and this very small amount was regulated. So really, what could the FCA have done? Nothing. What happened to Greencell really happened in other countries, the other side of the world, realistically, in terms of where things went wrong. It had a bank in Germany, they didn't know what was going on either. I mean, a lot of things went wrong. So we haven't, but we ended up in a situation where all of a sudden, Greencell was in the headlights, the FCA was being asked questions, people all of a sudden started learning about appointed representatives and suspecting that that was a problem. And then up pops an ex-prime minister, which turns it into a political issue. And before you know it, it becomes very much a partisan type of a conversation. And the FCA was forced into looking more closely at this industry. I believe, I'm perfectly happy with the FCA looking at the industry. I still think that there are things that can be improved on. But I think CP 2134 is the timing of it has to do with Greencell, and actually that had nothing to do with ARs.
So that's a great explanation. Sorry, James.
In terms of CPD, whatever, run us through the different types of ARs, because to me the FCA is conflating ARs as ARs.
Well, I mean,
and they're just not the same.
Look, I mean,
and in this document, AR equals AR, which could be IFA, could be Greencell, could be a really well-run umbrella broker. Talk us through the difference in ARs as we see in that document.
Again, I mean, we have to keep this relatively straightforward for the audience, but there are different permissions that allow you to do different things in the regulated world, and you can advising and arranging is where you are obviously giving advice to someone or arranging transactions. Now, if somebody undertaking a marketing activity, marketing hedge funds, for example, they're bringing together a buyer and the seller. The buyers are obviously the investors, the sellers, the fund manager. And that kind of activity requires regulation if the asset is a financial asset that you're selling. Now, ARs have been used realistically there's a couple of main categories. In the wholesale space, again, we're going to focus, let's remember that ARs were really invented for the retail space, where
as
obviously,
IFAs.
not the IFAs where I think that requires a bit more work, but really it's distributors of insurance products. Because effectively you have big insurance companies, Prudential, whatever, Norwich, Aviva, whatever they call them, and they would have, a representative in every village over the corner shop that sold motor insurance and home insurance. And it was not possible for them to get regulated, so they became an AR, the main one. We've all bought products from ARs. Every time you go and get a car insurance policy or whatever, it's an AR or something. Again, a completely different part of the market. And the trouble with CP 2134 is that it puts a lot of the retail, it talks about the number of complaints. It talks about the number of times the financial, the compensation system has had to be used. In the wholesale space, because they're wholesale and you're not retail, you can't even use the FSCS. You can't even use them. So, the point is all these complaints and other issues really weren't related to this industry. So yes, there's a lot of confusion. There's a lot of tidying up. The FCA in the consultation paper finally defines regulatory hosting for the first time and accepts it as a sort of term, which has to do with the fact that that's when a principal firm has ARs operating underneath it whose business is unrelated to the principal firm's business. So breaking that link between the insurance company and the ARs, etc. And and so regulatory hosting, which has its own chapter or section in the consultation paper,
So
I
it's
think
moved away from hedge fund hotels then, which are also regulatory hosts because you go on their platform, you get their trading.
MiFID hosting firms, because the hedge fund hotel really was a term used for places that had physical space and would rent out also some regulation around that. And there are a couple of players in that market here in the UK, but it's relatively rare, more in America. But yeah, so the point is that the AR regime is it's a catch-all for a lot of different types of activity. Some of them definitely need to be watched. Our industry, I think, as I said, I welcome the FCA's look at this. I do have problems with it, which we, can move on to. What I think, the issues. I think the issue here is that the FCA has done a bit of a knee-jerk reaction to the political fallout from Greencell. Has come out sort of saying we're going to need to regulate this group more. We're going to need more reporting. We're going to need more this, more that, and we're going to need to control. Get rid of that whole speed to market issue. They put this 60-day limits on various things. So the idea is to kind of take back control. The trouble is they don't have the resources to do that, or at least we didn't think so until they started advertising. Shona caught this, that they're advertising for a whole new team to be hired, and in the job spec, they actually says all the things that are in the consultation paper, which are sort of up in the air. They said, no, this is what we're going to be doing. So they've obviously already committed to this new path because they're hiring people to sort of look after it.
So on those factors that the FCA are most concerned about, Andrew, you've led some strategic change inside your organisation over 3 years, but this consultation paper only came out recently, so you had to preempt what some of those problems were and what they might address. What were the big themes that you wanted to address that you were preempting that they may come out with as well?
Well, they set a lot of that out 3 years earlier in the Dear CEO letter. So I'd slightly have a different characterisation in a sense. My sense was that Greencell was the cherry on the cake, and it kind of been building up, and Greencell meant that you had to have a proper consultation paper on just a Dear CEO letter. Okay. But in the Dear CEO letter, they talked about governance. And, I think the fundamental problem, as I said earlier, was that the industry was founded by entrepreneurs, who were in it for the commercial reason, really. And, if you're running a regulated business, any regulated business, is that conflict between commercial success and, meeting the FCA standards, complying with all the FCA rules. Complying with the FCA rules costs money, that's the point. And I think the senior managers regime's going to help with this. You've got to have SNF 16's heads of compliance, MLROs, which have that responsibility, and also they have to be different from the CEOs who have the commercial, pressures on them, etc. You have to get the governance right. So that's a key thing. The other thing it talked about that's in the the Dear CEO letter was about MI and the boards actually being able to make these judgments and manage those conflicts. So we've spent a hell of a lot of time creating management information, key risk indicators, and obviously that can't all be dealt with by the board, which meets quarterly. So we've got like monthly risk and valuation committees, monthly compliance committees, because the AR and the AFIN businesses have different risks. We have weekly meetings on issues and that are coming through. And then I'd say the third thing is actually the monitoring. So again, the tradition, and Joe was probably an honourable exception here, but the tradition was in the industry to get a lot of self-attestation. So you'd send a questionnaire to the AR, and the AR would say, yes, I'm doing all these things, I'm absolutely fine, nothing to see here, move along, yeah. And the FCA made it quite clear that kind of monitoring was not, acceptable. So a huge change in our business in the last 3 years is, we have monitoring programs that you would see in an in-house asset manager or a compliance consultant would run. There are working papers, it's all structured. then you do it every quarter at least, and then you issue findings back to the AR and say, this needs to be enhanced, this needs to be changed, that needs to be changed. So that's a fundamental change as well in the industry.
So on a nitty-gritty basis, something I've never understood, and I've debated extensively with Joe, the umbrellas are regulated by the FCA. They have to obey SISC, they have to obey all the rest of it. Yet, for the longest time, they relied on contracts with the clients to access data, access systems, give them permission to do monitoring, which has always struck me as tipping off, no segregation of duties. But also, for the regulatory host, a massive technical challenge, because you have to go in and actually under SIS 9.1 with record keeping, you have to keep critical business information. That means you, as the regulated host, have to have the information. You can't rely on a contract. So there's a technical challenge, which we've worked on with Joe to solve, but you have to go into every single firm you have, gather all the information, take it back to the mothership and look at it there. And yet you talk to a lot of the regulatory hosting marketplace about the actual technical implications of being regulated. And so many of them do not understand the fact that the rules around SIS 6 and the compliance officers' access to everything, SIS 10A call recording and being able to block or allow information means that you as the regulatory host actually have to get down and dirty with every single one of your clients' IT systems and bring all the data back and manage, curate that data, segregate that data, report on that data. And that's a massive thing that Mirabella tackled head on. A lot of regulatory hosts don't even know it's a thing.
Yeah, I think that's right. I mean, it's a question of stages, and I think that is unresolved business, and I think that's a fair point. I mean, the first stage is to take the monitoring from attestation and questionnaires to what a compliance consultant would do.
Journey's 1,000 steps, right?
Yeah,
Take the first one.
So that's a huge step. So it's now, an authorised firm as a compliance consultant, every quarter you gather data, you go through a programme, you do the working papers and you give them findings. So I think the next stage, you're right, of enhancing monitoring is what you're talking about. I mean, Joe distinguished himself by being ahead of the game there. I mean, we also have a technology monitoring technology called Max Comply. So we are very heavily engaged in using that to enhance the monitoring. But I think there is a big need to take that second step and really it's partly to do with each ARR as different counterparties, and especially if they're dealing in listed instruments in that kind of listed fund. I'd agree there's unfinished business and work to do there, I just wanted to go back to the wholesale retail point as well, because and to bring in the B word, Brexit, I think it's very important that we understand the type of ARs, these startup funds, corporate finance, distribution businesses, the fact that they can get to market at a reasonable cost is one of the benefits of London. It's something, worth protecting. It's on the continent, it's very much dominated by big banks and big insurers. And having this ecosystem of entrepreneurial, entrepreneurial startup financial businesses, and this is the wholesale market, and this is where I think we have to distinguish between the wholesale market and the retail market. It's very hard, but on the wholesale market, I do think it's important that the FCA don't throw out the baby with the bathwater as it is, and we have a new, encourage providers like us to raise our game and have better governance and monitoring rather than do too much damage, because I think it will damage London. It is important. I don't want to overstate it, but it is one of the factors.
Part of the economy.
It is an important factor in the ecosystem that helps London. And London, I think, has done a lot better than people feared post Brexit. And I think one of the reasons are these kind of more entrepreneurial, innovative businesses, and fintech as well. And it's part fintech's part of that as well.
You mean MiFID 2 hasn't made everything cheaper?
So, in light of the consultation paper that the FCA brought, what immediate damage is that causing? Is it slowing things down? Are principal firms allowed to take on more clients or customers? What's the immediate impact? Is it causing people to stall or?
We've never had a better year than we had last year. I mean, we're taking on 3 or 4 new funds a month on the AFIM side. So I don't know if that's. I think some businesses are withdrawing from the market. You also have to put in capital. You have to hire more skilled people to make all these changes. It's expensive.
So change is already happening very fast, even though the consultation.
Yeah. I think the DCO letter fired the gun on that. I mean, as I say, I think Greencell kind of put a hat on it from my perspective. So this has been going on for a few years now.
So one of the things in the consultation paper, and again, it's mixed up with retail and wholesale. It's hard to tell, but the FCA is basically saying there's around 3,600 principal firms in the UK. Over half of them have only got 1 AR.
Yeah.
Okay, so I think the FCA is saying we want to knock them out, right? Because generally, if you've only got 1 AR, you haven't built up all the systems, you haven't got all the reporting, you're doing it for a mate.
Okay.
Somebody's helping, and that side of the business, and I'm not going to, bound to be some of them that are great people, and in some cases, you have a classic example of a group of people that work in a company, and then a subgroup of those people say, listen, guys, we want to leave, but let's do this in a friendly way. Sort of like the Tiger Cubs and whatever. Let's do friendly. But let's start off with us just being an AR view. But we know each other really well, and we've been working together. And we can just use so that works. But it's just the any regulated firm can become a principal. There's no special requirement. So if you're just running a regulated firm and your brother-in-law calls you up and says, "Listen, we were talking over Christmas lunch. I want to start my own firm. Can I just hang off you for 6 months? I'll pay you £100 a month." They do it. And so there's that side of the market has sort of got to go away. I think the consolidation, what's happened, you're asking about the impacts. We're seeing huge amount of consolidation. There's a lot of factors, but one of the factors is that private equity became very interested in this space for a variety of reasons. As they become interested in a space, they start looking around for deals, etc. And there is some consolidation and M&A activity. I mean, we just saw KB Associates just went, and there's a whole bunch of others that are going. And forming and becoming part of bigger groups. And I think there's going to be, back 3 or 4 years ago, one of our former colleagues of yours, as a Kroll, had told me that he had a spreadsheet. He was tracking the number of wholesale principal firms, kind of our competitors. And he said, how many do you think there are? And I said, I think we've got about 28 to 30 that we think are in the business. And he said, no, I've got 50. Wow. 50 firms in the business. I'm guessing that will easily halve by the time the consultation paper is over, and it's going to end up being bigger firms, more professionally run, better governance, satisfying the new reporting requirements, doing a better job at a higher price. And I just want to go back slightly on the Brexit issue, because I feel very passionately about this. We used to have all the time, especially American firms, but other firms from other countries would come in to see us, and they would say, we're looking to start up in Europe. This is prior to Brexit, obviously, and they'd say, look, we want to open. We're looking, we need to have a beachhead somewhere in Europe, and we're looking at Paris, Frankfurt, Berlin, London, And we said, well, you can be up and running in London in a month. They're like, well, all the other places take a year. London it is, right? And I can't tell you, probably a third of our business was that sort of the immediacy of it, the ability to run the business. And now we're hearing there are firms in Germany that are offering tied agents, which is sort of the equivalent in MiFID speak. And they've gotten their heads around, because Mirabella started something in Malta where we got the regulator there to understand breaking that link between the principal firm's business and the underlying firm's business, the hosting firm. And this is spreading. Lisbon is looking at it, there are all these various places. And what are they doing? They're looking at the UK saying, we want that. And you've got it here, and you're about to throw it out the window. So
do you think now is the time that we get a community of interest network together with the good providers?
Well, I'm involved in trying to do that, trying to get some people involved in making a standard, trying to change the perception of the industry, and especially with some of the people, when you listen to some of the people on the Treasury Select Committee, obviously, who I've only had 5 minutes to look at this, and obviously the knee-jerk reaction there was very negative, and I just don't think they understood what the value was. I mean, we spent a lot of time working with the British government on the international trade, what's it called, Department of International, DTI.
DFID?
No, they changed the name a couple of times, but effectively they're in all the various embassies around the world, they try to promote it, and we would go to them and explain what the benefits were, and they saw this as a huge positive when they're competing in the outside world.
So you are setting up the industry body? You're attempting to?
I would love to have more of my peers jump aboard, and the reason why I think there's some reluctance is because I'm difficult in the sense that I don't see the point of having an industry body unless that industry body sets standards.
Has to.
And
hedge fund standard board,
right,
like a charm.
Right. So for our industry to be taken seriously by both the regulator, and I'm not going to pretend we're going to self-regulate, we're not, but I think we can show the regulator that as a group we are going to call out the bad behavior, deal with the people that don't know what they're doing, and report them.
Minimum standards?
Having them set a minimum standards. For example, having a surveillance system, not because we're on this panel, but because I don't understand how you don't have one.
Well, you can't do regulation without one.
But the reality is, as you've noticed in trying to sell to some of the hosting firms, as I'm finding with GRSS at the moment, a lot of firms out there, very well-run, regulated firms, and not even in the hosting business, are saying, listen, I get it, I see what the benefit is, but I want to see the FCA really care about the subject. Yes, they keep talking about it. Let's see an enforcement action, and then I'll jump.
But we've got enforcement actions, and they're still not jumping.
But the problem is that there are some enforcements, and again, Andrew knows better than I do, where they're not made public. And so they'll go in and say, listen, fix this, and we'll call it, you did it. And it would be great if we had a little bit more
if they could
publicity.
publicise Section 166. We covered this on the last panel where we had industry lawyer and industry consultant, both who were saying, we've never been busier, we're dealing with loads of cases, supervision this, that and the other. And I was sat there going, why don't we ever hear about it? Unless you disincent the bad guys by saying, oh, and by the way, you just don't have to tell your investors, you have to tell the market that we've sanctioned you.
Yeah, I know. I heard you say that before. I'm a little reluctant on that because the problem is that the 166 can actually act in a very positive way to really fix a firm and have it in great shape. But look, in America, and I can speak as an American, you have a slightly different approach where obviously they quite often will shoot first and ask questions later, and
no,
yes,
really?
And there are firms that have gone out of business because they were accused of insider trading or something.
And they
never did it, but couldn't. All the money disappeared.
But a Section 166 is after a finding, right? So the FCA have come in, investigated, said, you're bad, you need to fix yourself.
Bad is a strong word. But
okay, you're not following the best practice of all the rules.
We want somebody from the outside to come in and look more closely at this. That's what they're really asking you to do. And
if they publicise that, the industry would realise that it's not an isolated case and they do need to brush up.
I don't know whether I would okay. I get what you're saying. I think you can do that without publicising a 166. You can say
maybe an aggregate.
You have an enforcement action that says we have found some failings with this firm. However, they've rectified them, and we are confident that they will go forward. And just announce it as they had a problem. Yeah, we think we fixed it. So the marketplace has some understanding of what happened.
Absolutely.
But I would say that if you are subject to a 166, it gets out in the marketplace in reality, James. So
it does,
in the wholesale,
Yeah.
I think in the retail, as I say, I think we've got to distinguish between the two. But in the wholesale market, everyone knows that you go through it. They know when it ends. They know. So I'm not sure it's as important as you think. I think where standards could work is in terms of due diligence and setting, I don't know, a due diligence kite mark or a standard set of due diligence questions, because going back to Brexit, I mean, what we're finding is, because we have an Irish AFIM and a Lux AFIM, and our Irish AFIM is actually the second biggest in the marketplace. It's got huge AUM, but with our Irish and Lux AFIMs, they can delegate, back to our MiFID permission here in the UK. So then that gets around the whole passporting, loss of the passport issue, and that's where we're seeing the market boom. So if London wants to, keep that preeminence, it needs to be a place where you can delegate back to quickly. Now, obviously, when we're doing it ourselves, that's fine, but there are lots of other third-party AFIMs in Ireland and Luxembourg that are not IQEQ, so they do a lot of due diligence on us as the delegatee. So I think if we could have, it's like a standard due diligence, and I think AIMA sort of did this in the hedge fund space.
Yeah.
I think if going along that route of a kind of, a typical due diligence questionnaire that then we could have ready, I think that would help. And I think you could have good take up there.
Yeah.
And presumably a firm like yours or a consultant could, annually, reaffirm that you do meet all those due diligence requirements that you provide. To
the way we were looking at it, we had a set of things that we expected, because obviously there's an annual audit, and the auditor has to then is required to ask some FCA related questions and look into some of the systems. But we would also get the auditor to analyze this set of questions. Do they have a surveillance system? Are they using it? Check the logs, check the, things that anybody can kind of do. And there's a couple of excellent sort of due diligence, independent due diligence providers like Perform and others that could do the same thing. So you could get people to check this sort of thing. And I agree. And you covered something really, really important there, which I really want to stress. We talk a lot about the FCA as being the one that should be doing this and should be doing that, but they're under-resourced. They're struggling. There are some, apparently, morale issues at the place and various issues like that, which make it harder for them to do all this stuff. What I found was always interesting when we were at Mirabella was the harder questions came from the investors, the investor due diligence. Now, you had these firms like Allborn and various others that would come in. That was in depth. There, every rock was lifted. And if you can get through one of those, you really feel like, and we would say to them, but we're FCA regulated. Why are you asking this question? They said, we don't care about the FCA. We know they never see you. We got to come in and see you every 6 months. If investors started to also ask this question, and this is why I felt kind of strongly about what we were doing at Mirabella, is because the investor due diligence, the sovereign wealth funds, the pension funds that came in, they were setting a higher standard, and they were there much more often. And their opinion really matters. I'm not trying to say the FCA isn't, but it really matters at bottom line.
Yeah.
Bottom line, right.
With my VCTO hat on, where I work with all of the little big funds that I work with, the biggest thing is either the annual audit of the investors or when new money's being raised.
Right.
Literally, they tick back. And I'm pretty sure the regulator knows this. And they say, look, you've got your bar of getting in. Once you're in, unless you're bad, we probably won't look at you, because we know that to raise money, you're going to be ticked back every year or every 6 months or every 18 months of fundraise by a Perform or a Allborn or any fund consultant that's going to come in and say, before our investors give you the money, how do you do 645? How do you do your market? How do you do your PA dealing? And that works quite well in that space, but I don't think it's universal enough for venture capital, for PE, for credit broking. It certainly works in the asset industry that goes out and raises funds to invest, but I'm not necessarily certain that level of due diligence is done elsewhere and can be relied upon.
I agree with you, and I think there is, regrettably, in the alternative investment management industry, we include obviously private equity and hedge funds as sort of and certainly private equities always felt like there's the compliance is, it's something we do, but it's less of an issue. They're not usually dealing in the listed space. They're dealing with, very, very knowledgeable investors and all the rest of it. And, I found it quite amazing when Mirabella was put up for sale. I met a lot of private equity groups, and we would have to just mention to the private equity group, by the way, because I'd look and learn something about them, and I'd say, by the way, your website is not, is breaking the FCA rules. The way they explained their regulatory status was like for something you would have written 15, 20 years ago. They just haven't, they don't keep focus.
Well, my feelings on email footers that nobody ever gets right.
Right.
Because there are some very
Please don't get him started.
God,
Please don't get him started.
We can talk about aeroplanes as well. I love those too.
I know, God, that was such a mistake. I don't know why I went there.
Thank you. So we've gone through what principal firms can do for themselves, the governance that they can change internally, changes that you've led for the last 3 years in running a responsible firm, the systems and processes and controls that you put in place at Mirabella. So those could be adopted widely. There's an industry body that could be put together as well. There's being stronger with clients themselves, saying, sorry, this isn't just about a contract that you propose, James, this is about you have to give us this information, end of. And then there's investors as well who have their role to play in DDQs and having approved principles, and then managers being drawn to that money and choosing principles based on the governance they have in place. So then back to the FCA, you touched on it briefly, saying that they're under-resourced and such like. What role do they have to play now, and how could they change it? What could they change now to help?
Well, I mean, as I said, they are changing. They're hiring a dedicated team to look at it. I think it's a mistake. I think that it's confusing to me because I think the SMCR exists for a reason. It is there to say senior managers have to be held accountable for their actions within their regulated activities within their firms. And for some reason, the FCA doesn't feel confident enough that in this particular area, I don't know why, the SMCR isn't working properly. It should be, in my mind. So obviously, the AR regime, by the way, it doesn't sit within the SMCR, but the regulated firm, the principal firm, does have to abide by the SMCR there and is held accountable. So I would say, come out and go after the managers of hosting firms that have done a bad job. Go after look at the governance side. I don't want to overdo this, but the difference in quality level between where the IQ-EQ former business, I don't know, we're allowed to mention also Connor as a word. We're not allowed to say that. I mean, and where they were and where they are.
Like, and,
where they were and where they are, that's because they've done exactly what this. And so, in my mind, I can't understand why the FCA can't just say, look, we've got a set of rules, we've got a set of principles that are here. Rather than saying, no, if you want to have an AR, you've got to put in an application. We've got 60 days to review it now. You'll remember, way back, 2 or 3 years ago, to get an AR registered. Yes, it was very easy because any firm could do it, and you just gave the name, the address of the AR, very, very basic information through Connect. A day, 2 days, 3 days later, it was on the register. And now they want to stretch that out to, well, we've got to review it, we're going to make sure that you understand what they're doing, we're going to look at your onboarding process. And I'm like, well, wait a second, they're either a competent firm and they know what they're doing. We've been doing onboarding, we write a report to the board and everybody, we've been doing that for 10 years so that, we know exactly what somebody is doing and what they're supposed to be doing, who are the people, background checks on everybody, all of I just feel like it just feels like a bit of a nanny type environment that is not necessary.
But Joe, here's my issue with it. There is the Senior Management Arrangement System and Control Handbook, SIS Handbook, which is pretty clear. And if I had chosen as a firm to be self-regulated, I would have had to follow the SIS Handbook and put in all sorts of arrangements around business continuity, access for the compliance people, whatever. It's well thought through and it works, and it governs a whole load of financially regulated businesses. All the bits and pieces in there are what you need to run a business operationally. They've thought it through, down to outsourcing and SysGate, record keeping, call recording, everything is in there, right? How to run it. Mm-hmm. Only 2 or 3 regulatory hosts even have a passing comprehension of what's in there. And the FCA has never sat down and said, we know how to regulate financial businesses. How you operate is in the SIS Handbook. Follow these rules.
But we're not arguing about anything. All I'm saying is
you don't need to
they should, but rather than saying, so we're going to start to oversee all the minutiae of the details around onboarding and checking that you're doing this and that and getting involved in whether a firm should be an AR or not.
Yeah.
Because they got yelled at effectively in the Treasury Select Committee, this concept that, well, these firms, you have an applications team that decides whether somebody gets authorized or not. Yeah. And yet these ARs can just become, they're not authorized, they become registered.
As the FCA, you're looking at your rule book that everybody else is governed by, and you know that these guys don't. Why would you trust them to do ARs? Because they can't even do the basics that every single other person has to do.
We're not really, my point is, under SMCR, you should be able to go in there and say to the senior managers...
But I think the FCA is looking and saying, SMCR is Johnny come lately compared with some of our rule books. You can't even follow the rule book. So
SMCR was a major... SMCR changed changed the attitude tremendously in the industry. You got to understand that people, who are in the industry really took a step back when we read that and went, wow, we've always been responsible, but now there's no running away from it. And
Mirabella did. The reputable ones did. I'm not saying that you...
But it's the same problem.
Part of it. I'm just saying the industry in general doesn't really think they're the regulated person. They think the firms are regulated, not them. They don't need to run with all of the
It's great.
Well, I
systems
think
and control.
I'd take a middle view, as I'm in the middle of you two.
Hey!
I think the FCA have been a catalyst of change in the last 3 years, and were living proof of that. I mean, we have transformed the business. We have invested a lot of money. We've hired a lot of senior people.
Yeah.
We've invested in IT. I mean, it's a massive investment that's happened, and that's due to the FCA Dear CEO letter. So the FCA are making a difference. They are a catalyst for change. Catalyst for change. We are heading in the right direction. Where I think I sense your frustration, I agree with you to some extent. Maybe they're not doing it hard enough.
Yeah.
And maybe, I think maybe what Joe's saying here is that maybe they should use SMCR and find some individuals more actually saying, I mean, I am a senior manager, so I might regret this, but I do kind of agree with you. I hope it's not me, but yes. So they maybe should be, because they're doing a lot of enforcement actions. We know there's lots of Section 166s going on, although they're not publicised. So maybe you're right.
Be brave, publicise them. Who's got a 166 in the industry?
Everybody.
Well, lots and lots of people have.
Okay, so
and everyone knows that. So I
when
don't
would you
think that's
tin
an
tack
issue.
a client? How bad would they have to be before you went, right, you're off the platform?
Sorry.
So you
run.
Well, we had this announcement in December where they had to offboard some ARs.
At what level, right? Because it's a commercial decision rather than a regulatory decision. If you're in...
No, it was a commercial decision.
If you're in a large bank and a trader's mistraded and broken a rule, he's out because he's a tiny little bit of the entire machine.
Yeah.
If you're a regulatory host and you've got 10 or 12 clients and one of them isn't doing the right thing, there should be a Principle 11 report or something like that, but you're going, oh, actually, they're worth 20% of my revenue. You've got that conflict there. How bad do they have to be?
The consultation paper spends...
It's a really good question, James. It is a good question.
They talk a lot about, why aren't more firms getting fired, in that way.
Yeah.
At Mirabella, we did get rid of quite a few firms, but we had the benefit, as did obviously IQEQ. When you have so many clients, no client represents a large portion.
I'm not talking about
yes,
best practice. I'm talking about.
But that's why I believe that we're going to end up in a business or a sector here where there are going to be fewer bigger firms,
right,
rather than many smaller firms, because
But
these.
where does that leave Andrew's entrepreneurial argument about fast moving and the rest of it? Because big firms are quite sclerotic and have different risk parameters, and I
think you can still be a big firm and be reactive to, I think depending on obviously on your appetite for, your risk in the business. I mean, some firms which have been bought by trade buyers like IQEQ or, some larger private equity firms, they've changed their risk significantly, and they got rid of a lot of clients, and a lot of the principals have gone through and pruned quite heavily. The ones that just simply they realise are
and do you
not
think
make
this
sense.
could be another reason for the FCA's interest now, because that pruning's gone on, yet these people are still ARs after they've been off-boarded from the reputable ones, and they've managed to pick up a relationship somewhere else?
I'm somewhat stunned by seeing firms leaving as an AR from one
and
firm
hop
going
to another.
to another one, and then
How do they pass a regulatory reference? Because SM and CR, you need to give a regulatory reference, and your regulatory reference is they didn't run well enough for us. Why would anybody take them on?
Because unfortunately there are some firms who say, well,
but
that's
how would the FCA let that happen? Because you have to go to the FCA and say, yeah, we've taken these people on. The regulatory reference, so they got Tim from the last one for being bad. And the FCA say, oh, fine, put them on an A.
This is probably the
wholesale market or the retail market.
In the wholesale market. People hop
in our case, I can say, we de-risk. So
no, to be clear, you are getting rid of them because they're not the right people.
we
but
offboarded a lot because we took a risk appetite decision not to have retail.
But Andrew, they're still regulated with different umbrellas.
Yeah, but if we're offboarding them because we've taken a risk appetite, we don't
Then they haven't
want
done anything wrong,
retail,
is what
then
he's saying.
there's nothing wrong with them going to
Just
a
a
principal
change
firm that wants to do retail. I think that's part of the
Okay.
dynamics that
Okay.
you've seen. So
So I
you
guess I'm asking for good war stories. What's the worst
So
that
what-
people have done before you've thrown them off?
What I'd like to do at this moment is pick up on the theme of bigger firms. If there's going to be consolidation in
Yeah.
the market, and there's going to be better governance, and firms are going to be run differently. There will be proper systems and controls in place. What role is there for service providers, technology, fingerprint, for example, inspired by some of the work that you're doing in Mirabella? What role is there for technology and service providers to make bigger principal firms, the consolidators in the market, what helps them become more competitive as well? Because it is a little bit about price. It can't just run away. What will make them more resilient as well, and what will allow them to scale profitably. These organisations need to make money as well.
Technology is key to this. So we are seeing a consolidation. We are seeing a flight to quality. I think we're only at the beginning of it. It's going to run for the next 2 or 3 years, but it's already happening. And as I said, you have to spend a lot of money. So the only way it's going to work and not become too expensive to be an AR is through technology. And we have our Max Comply system, and that really helps us monitor efficiently and effectively so that, the cost doesn't become too high. Because the people costs in the London market are huge. I mean, the costs of compliance consultants and people with compliant expertise, there's been huge inflation since the financial crisis, becoming very expensive. I mean, we've got an office in Newcastle, and as part of that process, we're definitely expanding our Newcastle office heavily as well. So you've got to think about the price and how you make this, this enhanced new world of enhanced monitoring affordable, and technology is going to be crucial to that. There's no question in my mind, and it's going to become increasingly important.
But the technology has to, and one of them, again, I'm not here to sell your system, and I probably don't know it as well as I should, but the systems have to be able to integrate into other systems easily. Because I think that one of the problems that we had, certainly, and this is going back 4 or 5 years ago, is we were buying systems to solve particular problems and then realizing that they weren't talking to each other. We just added a lot more work. So integration of systems and better planning of them is critical, and having systems that will appreciate what sphere you're in and how to work with other areas. Because I just think technology is going to drive it. I was going to say if I return to the industry, but it's more like when I return to the regulatory hosting industry, I would expect it will be not until I'm really confident that we have a significantly better platform than we did even at Mirabella, because it was somewhat disjointed due to systems that didn't interact.
James, what are the key themes that you see that technology could bring to scaling a business like a principal firm? I know your brain will probably be thinking about the word systematic.
No. What marks out a vendor in this space is multi-tenancy. So there are a bucket load of vendors that as a fund I can go and buy, and they do I was going to say bastard good job, but then I'd be swearing. They do a really good job of risk management, surveillance, supervision, all of that stuff. But it's only as a oneer. Now, if you're running a regulatory host that's managing 100 firms, you can't put in 100 oneers and manage those, because then you have 100 logins. You have 100 places to update all of your terms. You have 100 different risk alerts to get from different places. And that's really expensive because you bought 100 of every system to put in as it goes on. And
so
that's
why can't you just buy one and commingle the data?
You can't commingle the data because of GDPR and because of the SIS Handbook. You just can't. It doesn't work. So the vendors that succeed in this space are ones that can offer proper multi-tenancy. So you are taking all of the different feeds from all of the different companies, keeping them separate in the system, but given a single overall control pane of glass, a single ability for the account manager to slice and dice the different firms that they want to over different times. So actually, the vendor space as well, there are very few of us that are genuinely multi-tenanted. And actually, for vendors to provide proper services to any of the regulatory hosts, they need to be multi-tenanted from the ground up, or else the cost model just isn't going to work. But yes, systematic and controlled and AI and all the other buzz terms, but multi-tenancy is the key to providing services to this market at a competitive cost that enables the market to automate. Yeah. Otherwise it can't.
So we've been discussing this for over an hour now. So just to try and summarise where we are a little bit, if each of you could maybe just take 30 seconds, a minute to summarise where we are and what you see the future as being then for principal firms.
I'll start. I think the sector, the wholesale sector, which is what I know, rather than the retail, is crucial to London's continuing success, especially post-Brexit. I think the FCA, are a catalyst for change. The industry is changing. I think those trends are going to intensify. There's going to be a great consolidation. There's going to be a great flight to quality. The pricing will have to increase, to deliver these higher standards. And technology is going to be a key, way in which we kind of square that circle where we have enhanced monitoring, but it doesn't become so expensive. You can't allow these, the entrepreneurs who are starting up the businesses just can't afford it.
Yeah. Thank you.
Yeah, I mean, I agree, obviously, and I think the whole Brexit issue is extremely important, but I think the FCA has got to actually pay attention to what people are, the results of the consultation. I am a little bit perturbed by the fact that they are, advertising it as a done deal in terms of hiring people with job descriptions that effectively say this is how the industry is going to run when we're in the middle of a consultation paper. I also think they should have come out with an actual result or something to do with what they found at Mirabella, because they actually mentioned Mirabella in the consultation paper, but no, they've been in there for months. I don't know, at least a year maybe. We should know, what have they found? I'd love to know, because I think in terms of looking at the industry going forward, that's going to be a key barometer. If a firm like Mirabella that generally does all the things that they've been asking people to do in the future, we've been doing at Mirabella. So now the question is, what have you found that we really need to learn from this? So I think that, as I said, larger firms getting rid of the amateurs, because there are lots of them, people that just cash a check every month and do absolutely nothing. We've been screaming about them for 10 years. I'm glad they're gone. I think the industry is better for it, because I think with a higher quality we can deal with this issue of really helping firms to make that leap, to encourage people that are not sure if they are ready to start. The entrepreneur, the sandbox concept, which the FCA is so keen on in their own environment. We can help them. And the message I would have, if anybody from the FCA is listening, is work with us. We want to work with you to make this better. We all win. They have taken a somewhat confrontational element to this, and in the consultation paper, really, I get the sense that they're coming at this with we've already made up our minds, which I think would be unfortunate. And I'll probably never work in the industry again now.
Thank you, James.
And so from the vendor space, the message is the problem is solved. If you run a regulatory host, there are tools there that enable you...
Sorry, what's the problem solving?
The problem, it's called fingerprint supervision.
Oh, okay.
for communications. Right. There are other bits. There's doing risk, Liquid Metrics, eFlow, 2 really good systems that can do all of that. There are systems that can do all of your PA dealing and all of that sort of thing, the compliance alphas of the world. So the tools are there. There is no excuse on a regulated host business to say, can't find the tools. The tools are there. We develop them for Mirabella. Other people put them in.
Was it the FCA? I don't know if I haven't asked you this question, but the FCA has called in some of the system vendors to see the systems, because they've said when people tell us, just because they said people keep telling us there's nothing out there, and we got in and said we're out there ready to go, and they're like, well, right, that's not no more excuses.
And some of us have even designed our cost models to stick within free to the client from the regulated host. So this is a solved problem. The only thing that is stopping regulated hosts from satisfying the SIS Handbook and doing the SM and CR stuff is either their business model in terms of pricing for the clients that they have, and that has to change, or just the unwillingness to get involved with IT, because IT isn't compliance, IT isn't regulated host. IT can solve most of the issues that we're discussing here, in terms of onboarding, in terms of discovery, in terms of risk management.
I think if a hosting firm is not keen on IT, they're not going to be around.
Indeed, but you would be surprised how many we call, and maybe it's just our sales approach, how many we call for whom what we're telling them is news. Just is.
Well,
But if you could put together some form of industry body to set the minimum standards, to go to the FCA and say, listen, we don't give you a problem. What gives you a problem is badness, right? We want to work with you.
yeah, well, I think that's the same.
And that, I think, solves a lot of the issues if we can get the FCA into a listening mode.
Yeah.
So we'll come back onto that in a moment. So for those of you watching or listening, we have a Q&A session coming up now. So if you have any questions, please send them in, and we will ask our panel here. So do you have any closing comments on some of the things we've discussed so far? James, have you summarised where we've got to?
No, if Joe is the godfather of regulatory hosting and Andrew is the godfather of compliance consulting, then we're the bastard stepchild of both of them in terms of regulatory supervision. So I'm massively proud to be on a panel with these two.
There's going to be comments now.
Okay.
I can't attest their parenting skills on that basis, but
So a question here from Beth. Best practice, however, is worrying as there can be regulatory overreach. So should it not be the only basis for setting standards?
Is this referring to when we were talking about the industry our industry body having a best practice? Is that do you think?
I think best practice, so then that's referring to, however, is worrying as there can be regulatory overreach.
So the Hedge Fund Standards Board did it with a whole load of hedge fund practitioners because they didn't really like what AIMA was doing. And that worked really well. It was a group of hedge funds got together and said, here's how we want to portray ourselves to investors and to other people, and here are the standards that we're running.
I'm not sure it was because they didn't like.
They didn't want to pay for it or whatever.
I think that's
so.
yeah. I mean,
But it worked because it was it was the practitioners working out what their minimum standard was going to be. And I think if we're going to put an industry body together for this, it needs to be the practitioners saying, in a room, here's our minimum standard, because we know what good looks like.
I think that I can understand the concerns, and obviously we're talking about something that is theoretical. We haven't shown what the actual questions are, but I do think that if the industry is going to be taken seriously by external third parties, whether they're investors, whether regulators, whether they're legislators, because obviously HMT is looking at potentially changing rules, etc. It's got to be a group that actually represents the good practices of the better firms, which are all obviously practices that are built into the legislation. So the question of whether the regulator then reacts to that in a way that could be negative, it's hard to tell. I think it's worth trying, but it's if Beth wants to contact me afterwards, I'd be more than happy to get into it.
I mean, I think it's a legitimate concern, and that there is a risk that standards become so high it becomes too expensive and we price our services out of the market. But I would say to Beth, I think we're a long, long way from that. If you look at the CP, they talk, and they do unfortunately mingle the retail and the wholesale, which is not helpful, but they talk about the likelihood of you generating a complaint if you're an AR versus directly authorised firms. So I think there's a lot of objective evidence out there that we're a long, long way from that point. That might be something to worry about in 2 years' time, I would say, but not right now. There's ample evidence that standards are far too low and that the service is priced too cheaply.
I think actually Beth has just updated this.
Okay.
And
Right.
I think now that I've seen this, her question is born from what you were saying, which is, the FCA imposes rules that they've not consulted on yet. They've formulated their decisions already and they're moving in that
That
direction.
would be a bad thing.
But I do think, I don't know how Beth feels about this, but I thought the consultation paper, I felt like there was some sections that were, very cooperative and sort of positive, almost as if it's been written by a number of different people in different sections. And I think section 5 there are some elements within the FCA that really don't like the regulatory hosting industry and they have some perceptional issues with it, born out of the frustration that they've struggled to properly monitor it and themselves. And I think that it's sort of an admission that we just can't keep up with these people, and let's just get rid of. They even mentioned at one point, should we get rid of it?
First option. The first option for regulatory hosts was ban the lot of them.
Which is I just think if the FCA wants to be known as the regulator of sort of the serious marketplace that the UK has enjoyed, they've got to recognise that there is some good from this. We've got to work at sorting it out. But yeah, I mean, it does feel to me like, again.
But I think we've said we don't need any more rules. SM and CR should work for ARs. The SIS Handbook should work.
The SMCR really works
Because that's where it should work. There is a regulation there that should work.
Yeah.
And under SIS, there is a regulation there that should work. They don't need new regulations. They just need to say, follow the regulations we've set down, and we will understand in your environment what you are and aren't doing in regards to what you've already got. We don't need new ones.
That's why they should hire people to do that rather than specifically.
Yeah, I mean, as an ex-regulator, I have a bit of sympathy. I think I'm the most sympathetic person to the FCA and the political realities. I mean, the realities are that they need to intensify their supervision, they need to have more enforcement, they need to have probably more Section 166s, but they also probably, with Greencell and the political reality of the Treasury Select Committee breathing down your neck, you have to change rules as well, otherwise you don't look tough enough. I don't think we should worry too much about it. I don't think those rule changes are going to change how the industry's got to evolve. Yeah. So I'd be much more relaxed about it. And as I say, I think this is something we need to worry about 3 years from now, not right now.
So I have another question here. There isn't a name next to it though, which is best practice with firms like Mirabella and then other principal firms operating differently. Where have the lawyers been in advising their clients on this over the years, given the SIS Handbook and the principles have never changed?
Well, you buy your opinion from whichever lawyer you buy. You don't like the lawyer's opinion, you buy another opinion. It's how financial services work, isn't it? Am I allowed to say that?
I'm not
just
sure.
speaking a truth that's always silent.
Well, I think that's how the DCL and how the FCA works to some extent. As I said, I mean, we had our best year ever last year. And we were referred to by the lawyers. So the lawyers, they see the DCO letter, that changes who they refer to, and they're going to refer to the higher, quality ones that they have more faith in, where they know investments have been made, and the ones that don't do that investments, they're going to be on. The lawyers, don't want to refer their clients to something that's going to go wrong. So I think that mechanism is working. In my mind.
Not a lot of the lawyers are intimate with the reality of the regulatory handbooks in terms of how do they get implemented.
Right. Yeah.
So I think the lawyers' understanding of where we are, and we've worked as Fingerprint to talk to lawyers and say, listen, supervision is a thing. It says it here. Why are you advising your clients that you don't need to do this, or it's down the list? Because it's a rule. And people are beginning to move and go, oh, Lorks a Lordy, you're right, it is a rule, and people should take this seriously. I think the rules are the rules, but where people are focused on the rules is where the due diligence people ask about them and where the lawyers advise on them. And that can change over time.
I think, look, I agree with some of that. I think lawyers have to be somewhat pragmatic, though, in dealing with clients. They're in competition with other law firms, etc. As you know, they have to give people the right advice. And unfortunately, what happens a lot of the time when you have a regulator that's not out there as publicly as we would like is sometimes the lawyer will say, look, the law says, because obviously they can be honest with you in terms of underprivilege. They can say to you, look, technically you're breaking the law right now, but nobody is watching this. Nobody's looking at it too closely. I will keep an eye on it, and if it gets worse, I can alert you and do something. And that's why I sort of want to see a bit more publicity around the enforcement side of things to say this stuff is actually happening. What's really interesting is in GRSS, we've been going around meeting with a lot of the lawyers, and where we're getting a lot of traction is with the contentious side, where people are in the middle of a 166 or dealing with a 166 or other issues. And they have to quickly deal with all the problems that they have in the firm, and they quickly have to deal with surveillance and how to and so I think I think the FCA is very active. I wish they would tell people more about it, because I'm not sure that we are as clued up about all the various issues that they're dealing with. And that will scare enough other people into doing it, and the lawyers would say to them, okay, we've run out of excuses now, just get it done.
I mean, we don't know how many enforcement cases take a long, long time, so the big lags. So we don't know how many are in the pipeline. I guess on this panel we'll hope there's lots in the pipeline. You know, there are more findings, but I'm just going to point out there are lags there, so they may be in the pipeline. I mean, you may get what you wish for in the next few years.
I think he knows. I think he's
an ex-regulator. He knows
he's still on the group chat, the WhatsApp group chat of the regulators. He's getting.
Well, no, it's a regulator, so it'll be AOL or Yahoo.
Yeah.
But to go straight back to the question, what has changed? What's changed is what always changes for lawyers is they recognise the new shiny bauble that they can sell to their clients. So the rules haven't changed very often. We've had SIS 10A as part of MiFID 2 and a little rejigging of where you do your trade reporting. And actually it's taken 2 years before people have got into SIS 10A and gone, blimey, you mean we have to block stuff that we can't record? Oh, that means you can't do BYOD. All of a sudden, it's the biggest thing since sliced bread. It's been there since 2018, right? And people are only just seeing it now. The rules are the rules are the rules. It's the interpretation of the rules that change over time as what can the lawyers sell and what can they sell against each other.
Yeah, one of the frustrations I have is that there was that Credit Suisse fine, etc., for that sort of problem. And the frustration is that people don't understand that if the FCA goes after a bank, it's because they want to send a message to everybody, this is the problem. But there's like, they're only going after the banks, they're not going after us small people. But the message is clear, just you do need to listen to it.
Yeah.
Yeah, and if you are a lawyer and you've recommended your client to go to a principal firm and then it gets caught by enforcement, I mean, that's going to be egg on it. So there's an incentive there. It's going to be embarrassing. So if it's true there are going to be more enforcement cases coming out, the lawyer's going to have to pick and choose more carefully, I think.
I think we've got time for one more question before we go to that. This has been the next Shift Innovation panel. If you're a firm out there and you are interested in joining some of these panel discussions, please find Brielle Hewitt on LinkedIn. She runs and organises the Shift Innovation community. Please reach out to her on LinkedIn, and I'm sure she'll be able to find a suitable panel discussion for you and topic. So please get in touch with her. Our final question then comes in from Paul Bramley. To James's point, isn't the AR regime analogous to the Cayman jumbo director scandal of approximately 10 years ago, where a few directors were servicing hundreds of hedge fund boards? Having employed AR services, I'm astounded at the lack of interaction or interest in business culture and development. Is that?
I think that's fair. I think it very much depends which regulatory host you go for. And I don't think that the jumbo director thing has really solved itself yet either, even after all the focus. There are still directorships in Cayman and Bermuda that service thousands of firms. So that's a long-running thing. I think we're going to experience the same thing in regulatory.
But hang on, I've been on the other side of this argument quite a bit, because there's a couple of, some of the best lawyers in London, have said to me over the years, I can't see how you can possibly look after 60 ARs or 70 or 80, whatever the number was. And my answer was, look, when I had 20, I had 3 people. When I had 30, I had 5 people. We've added people, resources, etc. And there are times when, certainly in Mirabella, we would stop taking clients if we weren't comfortable that we could service them. Luckily, we didn't have some of the commercial pressures or because we weren't, we were owned by a larger firm, so they weren't sort of telling us, you've got to make tons of money all the time. So I think the main issue is look at the resources the firm has before you make. I mean, Paul's a smart guy, and I've known him and respect him a lot, and I'm sure that what he's saying is true. There are firms that had, and this is why the FCA now and recent people have gotten in the hosting industry have been limited to 15, 20 ARs based on the number of people that they have. The FCA said you can't possibly look after more than this number. The problem I have with that is I've got some people working for me and fantastic colleagues who've been doing this for 25 years, I would argue they can handle more people because of their expertise than somebody who's 2 years out of university or, starting out. No offense to those people, but the expertise is important. So it's not just the number of people, it's the quality of the people, the systems that you have. I mean, a lot of those directorships, all of a sudden, they went from being, quill and paper kind of operations to super well run. All the board pack systems were improved.
Yeah.
So all of a sudden, they could do more stuff legitimately and still keep track. So I get the question, smart question, but I think it does still matter. And I think what we're trying to do in this organization is to ask the question of, what is your resourcing? Have you got suitable resources? You can't do 60 ARs with 4 people. Just can't.
Yeah, I agree. I think it's a really interesting question. It reminds me of, what used to be said to the FCA, that they had all these tick boxes and they went in and did all this monitoring, but they didn't really understand the business culture and they didn't have the right relationship with the sort of founders of the firms. And fast forward, this is like 15 years ago when this debate has been having the FCA directly supervising. And I guess we have to see ourselves as principal firms as an alternative to the FCA. I mean, our monitoring is an alternative to the FCA supervision.
Absolutely.
So again, I think we need to go on the same journey. I think some players in the industry have invested in enhanced monitoring, but if I'm honest, I think we do have to, and we're going to have to hire senior, experienced people to have those interactions with the principles of the ARs and have those conversations about their business models, their plans, and get a feel for the culture at the AR and all that kind of thing. But I think we're still going on that journey. So I would agree. I think there's work to do there, even for the leaders in the industry that are emerging.
I think historically, as you've grown a regulatory host and grown the people, the diaspora of different strategies of the client increase more quickly than your experience. And so you may have a very good account manager that has masses of experience in a certain financial sector, being a broker, being a VC, whatever. And all of a sudden, they're asked to manage all of the other clients that have suddenly turned up. And again, to both of your points, the experience, yes, you've paid for a senior person, but it may be a senior person that's very expert in venture capital, but all of the clients have morphed to become broker-dealers.
Well, the classic problem is crypto right now, because everybody's really experts at everything, and all of a sudden crypto's coming in, and you've got to understand that. And for a lot of people, that's a struggle.
Scam.
That's a struggle.
It's a scam. Don't touch it. It's all
Okay.
a scam.
Okay.
If you've got crypto on your books, it's a scam.
Well,
that's all there is to it.
I understand your views. We didn't. Well, I was in Mirabel. We didn't have any crypto, but in the sense of
Because it's a scam.
Okay. Some people disagree with you. I know that's hard to believe. I don't. I'm indifferent right now in the sense of, I think that if something is legal and we've got we always used to take on business, and one of the questions we asked in the onboarding phase was,
it legal?
No, that was kind of understood.
A different
But
regulatory host.
do we have the skill set? And we would be challenged by, because every one of our onboarding reports was read by the board, and they would come back to us and say, who's got the skill set to handle this? And if the answer was no, you didn't do it.
Can't take it on.
But I think that people have got to be honest, and it's a commercial question. Do I turn down great business because I'm not sure I can do it?
Yeah, I think crypto should get directly authorised, personally, and we're happy to help people on the compliance consulting side with those kind of businesses, but I don't think we'd want to take them on as an AR. I think it is a bit too risky and I think that's a good example where, certain types of firms should be directly authorised.
So
by
crypto to me sounds as though it could be the subject of another panel. So thank you all very much for joining us, and a huge thank you to Disruptive as well for their studios here in central London, and again to Brielle Hewitt for organising Shift. It's been fantastic. Thank you very much to our panel, James Hogbin, Andrew Shrimpton and Joe Vittoria, and myself, Sean Morgan. Thank you all very much.